Hey there, welcome back to the channel. If you've ever felt like banks are secretly plotting to steal your last dime while sipping fancy lattes, you're not alone. But guess what? The tables might be turning. Today, we're diving into the coming deposit wars that could see banks begging you to park your cash with them. So let's break it down. Alright, so here's the deal. The banking world is in for a wild ride. Thanks to the Bank of England, there's a massive financial deadline looming over their heads, like when you realize your Netflix subscription is about to auto-renew at midnight. Except, in this case, it's not Netflix. They've got to pay back billions in what's called TFSME funding. What's TFSME, you ask? Think of it as a giant allowance the banks got during tough times, but now, Mom and Dad, aka the Bank of England, want their money back. And this could spark a frenzy for your savings, folks. So, what's happening is that banks are facing two choices. They can either go after investors or really compete for your deposits. According to HSBC banking analyst Robin Down, yes, that's his real name, not a wrestling stage name, banks might soon be fighting harder than ever for your dollars, like dogs chasing the last piece of bacon. Now this could be good news for you. Savers might finally see some juicier interest rates, and instead of just handing your money over for free, you might actually get something in return. Imagine that. But here's the twist. While higher interest rates sound great for us savers, it's like banks are running on a treadmill. Except the treadmill is speeding up, and someone's throwing pies at their face. It's all fun until their profits get squeezed. You see, banks rely on the difference between what they charge for loans and what they pay you, on your savings, called the net interest margin, to make money. With more competition, their profits will shrink, and that's when things start to get messy. Let's just say that by 2025, banks will be in a full-on scramble mode to repay their debts without losing their shirts. Cut to graphic, net interest margins, a delicate balancing act. In fact, some banks are already trying to avoid the chaos. Metro Bank, no, it's not a gas station, recently sold off £2.5 billion worth of mortgages to NatWest just to get ahead of this. It's like they're saying, no thanks, we'll just quietly sit on the sidelines and eat popcorn while everyone else goes to war over deposits. Metro Bank's CEO, Daniel Frumkin, who definitely sounds like a Bond villain, even admitted they're preparing for a messy 2025 to 2027, as other banks are forced to dig deep for liquidity. So what does this mean for you and me? Well, if you've got cash lying around, be on the lookout for some sweet interest rate offers over the next year or two. The banks will likely try to lure us in with enticing rates, kind of like when the ice cream truck rolls down your street playing your favorite tune. But for the banks, this is like a game of financial musical chairs. As soon as the music stops, they better hope they've grabbed a seat, or a pile of cash. So what do you think? Will you be shopping around for better interest rates, or are you sticking with your trusty bank? Let me know in the comments below. And don't forget to hit that like button and subscribe for more financial insights. Because, let's face it, we're all just trying to survive this messy banking world together. Video by your channel name. Thanks for watching.